Good morning. We are live. Go ahead, MMTs. You can talk while we're doing that. You can see how the call price is hit a 360 low, and you can see that the close was 6.97. That's because Google came down to 530.63 right here, and then it had that strong pop on the opening bell. The NASDAQ and the rest of the components are selling off. So what they're looking for now is on that first initial spike, on the first 3-minute price action bar, is that the following bar is either below it half or above half, and they're very strong. Right now they're very, very weak. We have a major reversal, and we talked about this, and we're at that 1171. There's that S&P 1185 put right here, 1420 by 17. Look at it there. It's almost $3 wide. There it is, a 70 print. Okay, so we have a rollover. You're canceling it. Thank you, because the stock is rolling back. Okay. You're down there at 55 pennies? Oh, okay. So that's good. Here is the actual chart on that Google opening bell. You can see that 3-minute price spike. That's what I was talking about. That's that spike, but look at that. Look at that teeny drop. 1, 2, 3, 4, 5. That is precisely to our price action teeny line, right to the penny, and right to the bottom up, and this is the weighting in the middle. That's within milliseconds of transactions taken by machines. It's not a human being that could do the transaction that quick. And that's where on the opening bell in that first 3-minute print is now they're going to try to set this price action up above this half bar. Then we would look at how this price action gets weighted above this whole half. That's a 6 bar, and you have to see that breakout wanna just roll. Oh, there's that diamond pop, but you got to keep it going. If it slides below half at all, then you'll know how your calls and puts are getting weighted. Right here they are. Here's the 535 call. So if I get weighted down here, then that means that $1.40 low is going to hold. Okay, and here that's at 535. Here's at 530, because Google is bouncing tremendously, as it should. Yeah, you should be in it, because you got a diamond pop, and this is what I'm talking about. That's how you get the low. Here is it live again. It was a diamond pop, and it's live, and it's here, and it's now. So what's going to happen is you're going to end up making your prices over here. That $1.40 held. Okay, that's today's expiration. This is today's expiration, Friday expiration. Those are the prints. That's the close. That's the low. You've been now selling out in here is how you would exit. You would be selling out in here. You take your profits. You won't barter with those. Okay? Always exiting into the strength based on what this did. Everything worked for you here, but you need to continue. Once it stops going in that direction, it's at 56, so 55 is going to hold. But I can guarantee you right now, if this thing's not running toward 90, hey, you're at 0 negative right now. You're still 0. You're point negative right here. See? And you're going to have to continue that. And you're going to have to get up toward 95, 97 here, up above 75. That's how that move is going to go. Once that is happening over here, you can see how your calls have a market. And you have to learn how to execute within the market based on the actual price weighted movement in the equity. Because that's the bid, that's the ask, and you already made a profit. You're buying down here, $1.60. You're exiting into the high was $2.80. So that's the range right here, from the low wholesale entry to the high end exit. And why? Well, everything here. That's all. And look at the put side. Here. That 535 put got down here. It's printing on the low. Hey, this one here at 730. That's a 540 in the money. Both expire This one expires today. This 535 here, that's a different weighting one. They finally made a high of 1170, and that's a 917 expiration. Okay. This one here is the one that we're really watching. That's at 670 low. So as Google goes higher, this side of the market prints down. And eventually, these are going to make their high, and you have to learn how to exit out of these while you're purchasing this side. When the trend does its price action weighted, it will weight its price to each side of these markets now in directional price movement. So when you go up to those highs like you did, you slide right back down. And that's exactly what happened in the price. Here's a chart right now. And you can see here why you would always be selling into the move. You're back down to $1.40 now on the low of the day with the 280 high. Look at that reversal. Why? Because look at that diamond drop right there. You're coming right back down to make that total bottom low. So they spiked it. That's a 9 bar. Now remember, MMTs on the 3, the 6, and the 9 like this is, once again, this is going to have to really rip the other way. And as long as that's doing it, hey, look at those puts going up there in value. Look at those puts going up there in value. Look at this side of the market. It's almost... All right. Because we're reversing down there, that's a double bottom. I think that's a good market. We're 280. Let's stay there for now. Because if we do put a market... Oh, you're really torpedoing in the Dow. Take that call down to 2.30 and put it down below the market. So cancel the 530 there. The ones that I gave below the market on the 535, you're okay. Give me those bids. You're at 1310 to sell? Well, what? On what? He canceled the 535. I'm sorry, can the 1165? All right, and that's the call on the S&P. That's the... All right, so let me take... Here. So that's the 1165 call right now. That's this one right here. Wow, 24.43 was a close. You talk about people getting taken to the woodshed on the call side of the 1165 in the money. Here is that perfect example. All right, let's try to make a market. Here, we're doing it live. Now, everybody, we're down 205 handles. Look at here. That S&P 500, once it does find its bottom and its support level, look at here. 1069 was a low. Put bids out here right now on that 1165 right here, right now at 3.8. Throw that bid out there below that 6.2. It's 6.2 by 7.6 below. They're trying to make that market below there with that hardcore selling, and you're at 1166. So the thing about it is we got to get an immediate reversal in that S&P, and when we do, you can see that ask is rising right now, because as soon as you're printing at that market minus 18.93 right now at the strike, look at it. All right, now I'm going to show you what to do. Throw one contract out there at 650. That will make the market below here. Let's create a need. There it is. We got a 650. Now look, that's a $3 one, but that's SMF 650, and that's somebody else at 950. So what are they going to have to do? They're going to have to buy, and we're going to keep it there. There it is. There's our bid, and there's the ask. And this is all happening in 14 minutes on the opening bell. And it's a Friday, and it's a September 11th weekend opening bell in memory of all of the people who were a victim of those bad behaviors that people did in the state of New York. Huh? Okay, I can't go over to AGQ right now. I'm making a market. I just made a dollar bounce right here and I'm live. Look at that. $1.15. And there's that dollar pop. Why? Because I bet you Google is really popping. And let's take a look at its bot. Oh yes, this is what I'm talking about right here on that 3-minute. When you come down and you make that, that is what you're looking for. That is a live breakout right here, right now. No, that's the way it happens. And this is where the machine did that. And look at the amount it did right here. And this is how bottoms are made live. I'm sorry. Look. Keep that 650 there. That's what you're looking for. But if they keep sliding that bid down, and you got the diamond way down here, that means they're just testing those. Those are high frequency machines within milliseconds. And this platform gets it right to the penny. And they slid the bid right away. They slid that bid right away. You can see it. Torpedoed right there. Live in the print. And how do they do that? Is there is different things that people do in the bid and ask. Okay, here. That's a 650 bid right here. So basically, that's how these things happen. All right? And now you're going to look for that to hold the half bar. Okay? And if it does, you can start, you know, keep the market way down there where I gave those bids, though. Because, yeah, you are making a market in here, but that lower market still, and you can even see that 530 call, got down to 310. So you have almost a $2 spread right here. But you had a 697. So the people that held that stuff overnight, well, they're really taken to the woodshed. Look at here, 310, 6.97, but that's the spread right now today. And these expire today. And it's nice to see how these bottoms get put in by using your equity brain and how they're priced. This is that market right there. Look at here. Look at the calls. They're starting to flatten out. And you're always going to want to know where that lower end of that market hit, and you're always going to want to be able to use where this current opening bell cycle is right here, MMTs. And there's your bottom up, and there's your bottom up, and here, that's the big breakout bar, shot right up there, and that all happened in milliseconds. And that isn't a human being in those transactions like that because they happen that fast. It's just that our platform prices those events. And when they go up and they slide, well, what it means is that you're putting a bottom in here, and you can see these double diamond pops that I was talking about. That means that when you get these right here, that means that a transaction is being done within milliseconds that pop these things like that. And when they ascend in value, you look for the strength, but you look for another breakout bar just like this. And we haven't got it. And we are just right now at 6:47 a.m. We can see clearly where we're at here within the 20-minute opening bell. We can see where the diamond pop is to the half bar. If it doesn't hold support and get an immediate buy bar like this to follow through, then it's a potential short. But let's see how these diamonds hold it up above here. Okay, so I'll tell you what. Let's repeat the orders. We're coming down. We're live here now. Here we are challenging that $1.15. The reason being is that Google is weak because you can see the amount of selling today in the NASDAQ and the NASDAQ company S&P. And that obviously they didn't like the jobs report for some reason. This is a Google bottom right here that's getting put in. And that's nice because what you're looking for is this diamond holds that half bar. You'll never go below it today now. And that you're going to start to expand and break these tops. You're going to need strong, teeny action breakout bars like we're getting live here now at 6:55 a.m. 25 minutes into the tape. So you got 1, 2, 3, at 45 cents per line. Now, this is still part of this whole 25-minute bottoming process, and you have to get weighted with more price action on closing 3-minute bars to the upside. This must go back toward 85 to break these highs. Right now we're at 46. It looks like you have a 0.61 negative ratio. That was 9.78 teenies, negative 9.78 teenies. That's what you're buying, because it went from there. Now it's only currently, when it did that, right now we're currently at 0.33. And this diamond is going to be that level of support, and this must stay above that level. You have to have 3-minute closing bars, MMTs, like you have to have the teeny expansion. So you go ascending 1, ascending 2, ascending 3 teenies up, and it's doing it here. And you're elevated at 45 and you're at 32. But this is how bottoms get put in. And as we fall weaker here, going the wrong way, when that goes towards 61, that means that this diamond bottom support level is going to be weak, as you can see it, and the body is not up toward the highs anymore. And once again, you can see all of the wicks that drop down. They drop down. They do that in milliseconds. That they just drop down. And how do they do that? They do that right here. Let me show you. They do that in the bid and the ask. And what they do is, if you watch 532, see how it's 20 pennies wide on the prints in here? Once they get done selling this side of the market down, then this side will leverage up, and they will cross each other in the price directional movements. The bounce that you have to have from the 20, we're about 27, 28 minutes into the opening bell. First 30 minutes, and you made a bottom. However, the bottom is weak. And if you watch the bid and ask, the time and sells, if they're selling down here, that means they're, see, he sold below the market. 531, just like I said, right there, 77 pennies. So that's called sliding the bid. That support the short sell, all right? And that means that the put side of the market goes higher when that happens. That's what that means, because it's all going to be related to this right here. See how this put side of the market, the 535 put, that's a September contract. That doesn't expire today, but the high was $12, and they're not given the kind of premium that they should, but it's okay. We own it, and it's still going up there. If the S&P continues to break below 1166 now, it's below 1173. It's got to close back above there. All right, so this is phase 1 in the 30-minute action tape. Today's date is 9/9/2011. The time is 6:59 a.m. Pacific Standard Time, 10 o'clock Eastern Time. And this is the opening bell. Here we go. We'll look at the contracts on the 1170 put. S&P, yep, Google held. Okay, that's fine. Right now, that S&P popped. You can see the thousands of contracts that were traded. Then get net long. If they're holding the half bars and they're going that way, then you know the call side of the market's going higher. Look at the contracts bought on the put side. Now they're popping that S&P off the bottom. You can see that Dow, it's finally coming off its lows. The minute that we got in the first 1-minute price action bar of the second 30-minute transaction is where we had lots of people loading up on these put options here. Look at that. It's big contracts. 1,000, 1,000. I mean, these people are buying. Look it up here. And the time is 2 minutes in the next 30-minute price action tape, which is the opening hourly bell. You can clearly see where we're coming in on these things. You can see how they're doing it. But you can see how that S&P is popping off that bottom. All of the indexes are breaking up higher. Call side of the market is working. And the put side, the 1170 put now is dropping down to 2060 because you're at 1172. Now this expires on 9/17. It's not this expiration today. Let's make that clear. But look at that, 9/17. We'll be doing the S&P on its own. And the next live transaction, you can always go back to here. That last print was 21.60 on the low, 24 on the high, and they were all getting in on the highs. They were all buying on the highs. SMF, we're going to try to buy that. If we get above that 1173, let's set alarms to buy down here right around, let's say 17.80. And set an alarm at 1860 on this S&P, because if we do break higher, right now we're flattening out on everything.